In this clip, I'm walking you through a trade I executed in the London session. The first thing I identified was liquidity forming, and just below it, there was a 15-minute fair value gap. You can see the markings I drew on the chart. What I wanted was for price to grab the liquidity, tap into the FVG, and from there show me signs of a reversal. For trades like this, I usually take my targets at the liquidity on the opposite side. In this case, it was the previous high, which I marked with the green line. Here you can see me patiently waiting for the liquidity to be taken. When significant liquidity gets swept, a lot of traders get stopped out, and that's usually where the real move begins. If you don't have the patience to let the chart do what you want, you won't make it as a trader. Real traders wait patiently for their setup, and only then do they execute. In this trade, I was following the bearish fair value gaps, and noticed when two of them failed to hold. You can see the smaller one below in orange, and the second one right after it. Once liquidity was taken, price tapped into the fair value gap, and we also invalidated the bearish fair value gaps. That's when I knew we were heading to the other side. On top of that, you can also see that I had a market structure shift, and the last high failed to push price lower. Plus, the London exchange opens at 3 a.m., which is basically the same type of volatility we see with New York's 9:30 a.m. open. My targets were set at each high above, where I planned to take partials. I was expecting price to behave differently, so later in the trade I reduced my take profit directly to the last high. On top of that, my copier wasn't working properly, so I decided to officially close the trade at my first target. On top of everything, there was also a fair value gap on my side and an inversion fair value gap along the way. When you've got 3 PD arrays lining up on your side, your stop should always be placed beyond them. One thing I definitely need to improve is the placement of my stop at the very beginning. I'll let the trade run so you can see how it plays out. Once something interesting happens, I'll update you on what took place. Just look at the reaction we got right at the high where I wanted to take profit. When the market prints equal highs like that, so close to the target, it usually means they're going to get taken. But since it also created new liquidity and looks exactly like resistance, the way retail traders see it, I'd rather step aside and exit there. Then the pullback started moving in my direction, and I thought it might stop me out and dip into the fair value gap sitting below. Once price came closer, I was looking for a market structure shift to add on to my position and aim for a better risk to reward. And right here you can see my add-on execution. You won't see it on this chart, But on my NinjaTrader platform, I dropped down to the 15-second chart, where I spotted a market structure shift and a fair value gap on my side. It's important that whenever you add to winning trades, you bring your stop closer so you don't increase your dollar risk. At this stage, I identified a trade opportunity forming on the 15-minute time frame, with my actual entry triggered by the 1-minute chart. The broader trend was bullish, and the smaller trend had also shifted into bullish structure. When a market structure shift occurred on the 15th-second chart, it signaled the opportunity to engage once more, as both the short-term and higher trend were aligned toward breaking new highs. This alignment allowed me to successfully achieve my TP. That was my trade idea. I hope you enjoyed it. On this trade, I made over $30,000. I stream live on YouTube almost every trading day, completely for free, so make sure to follow and drop a like on the video.